Get back to the oil discussion that we've been having. OPEC and its allies putting their heads together, finally coming out and giving us the news we've been waiting for. At least we're waiting for some news out of them. What did they tell us? They told us they're going to proceed with their January output hike of 400,000 barrels a day. Of course, the big question had been, would they react to the Omicron variant? They seem to be leaving themselves an escape hatch, saying, well, you know, if things change, we'll change. Josh Young, Chief Investment Officer at Bison Interests, joins us now. Josh, always great to have you on and get your insights. What's the big takeaway here from OPEC and the allies?
Yeah, I mean, I think it's just that they're staying the course. It's funny, we actually talked about this a month ago in terms of the SPR release. OPEC has a deal and they're sticking to it. And with a tight physical market, they're just going to keep producing in line with what they had agreed to.
I know, Josh, that you've had doubts in the past, particularly when we talked about Biden trying to, strong-arm them to boost in their production. OPEC saying we're going to stay the course, that they even have the capacity to. So as they embark on this endeavor, longer term, what does it mean for the energy market?
Yeah, so, I mean, we've been tracking what they've been bringing on, and just because they continue to expand their quota doesn't mean that they'll meet it. And they've been over-complying for a while now. So, I think that they'll continue to over-comply. They'll continue to increase their quota by 400,000 barrels a day every month, and that they'll continue to miss.
Now, of course, President Biden's thing had been, I need to bring down energy costs, consumers facing soaring inflation, that you're a politician, you end up wearing it, whether you should or not. So he's going to take action. He taps the strategic reserve. At the same time, because of other forces, we have seen, and maybe in a bit of that, the price of American benchmark crude, WTI, started November roughly around $84. I think we're about $20 or so off of that right now. Where does the price head from here?
Yeah, I mean, not to speak ill of my president on foreign TV, but man, him taking credit for sell-off in oil because of a new variant of COVID was kind of a new low, I thought. It felt like something that other presidents who were even less popular used to do. So I don't know. That was pretty concerning. I don't think really it had much to do with the policy of the current U.S. president, and had a lot to do with kind of world affairs that are also not really related to the actual demand picture for oil or the supply picture. Inventories keep falling and things look great. And I think this is just a temporary blip.
So 67.19 I have my screen right now for WTI. Is this a price that holds for a while, or you think we're going to see some upward pressure again heading into the new year?
Yeah, I mean, I think the short term is really hard. Like, no one would have predicted this new variant happening this particular month. People wouldn't have predicted the SPR. I think it's just really hard to predict exactly what will happen in the short term. But over the medium term, over the next months and years, I would expect oil prices to go a lot higher.
Yeah, when it comes to that variant, right, I still feel like no matter how much I comb the wires and try to keep myself up to date, a lot more questions than we have answers. We have been warned by, the scientists putting their head on this, that the answers are going to take a little while to get sort of a full picture. Right now, maybe it's less this, maybe it's more that. Does that just make a sort of a very rocky path going forward?
Yeah, I mean, they like to say in oil and gas, come on in, the water's cold. So, this volatility is extreme, but it's also, kind of normal for the oil and gas investment universe, and relatively calm compared to what we saw last year. So, I think it's hard for new investors that bought in at highs, and it's kind of more of the same for investors who have been involved with the market at least through the last year, and especially over the last few years.
Do you get the sense that the Biden administration, with oil prices at these levels, will feel like, whether granted or not, mission accomplished, and they don't need to take any more moves in terms of their releases?
Well, I think it's hard because the SPR release was kind of nonsensical. So when people do stuff like that, it's really hard to predict what they'll do next.
Okay, so I won't make you talk too much about your president on foreign TV. You do have some names that you want to run through for us. The first one here on the list is Journey Energy.
Yeah, sure. So I want to make sure to talk about a couple that we've talked about just because they've had results come out, and then I'll get to Journey. So Baytex just released their budget today, or yesterday, and it looks great, and they're paying off debt, and they have some great results both in the East Duvernay and in the Clearwater. And so it's interesting because that stock hasn't reacted positively to that, even though the analysts following it, and I was actually pleasantly surprised by it. So that's looking good. And then SandRidge also we've talked about a lot, and they came out with great results for Q3. Q4 is really strong, it looks like, and they announced a carbon capture project and the stock fell. So both of those kind of interesting. The stocks haven't really been moving how we would have thought based on the fundamentals, and very promising amidst this volatility. And then in terms of Journey, so this one, haven't really talked about it publicly for a while, was something I used to own a lot of and repurchased a lot of those shares over the last 6 months, especially after they bought Brico, which was a spin out from a public company. And it's just really simple. Great CEO who was the founding CEO of NuVista, and very cheap assets with the highest free cash flow yield of any publicly traded oil and gas company that I'm aware of, at least that's active in North America, and with a very low corporate decline rate. It's just very well positioned and way too cheap, and something that's been remarkable to be able to buy. They did a great acquisition and they paid off a lot of debt, and it's just not very well followed, and it's a very small company. So I think that's part of why it's so cheap. But it's a very, very interesting opportunity, and it's something that's easy to own even in a lower price environment.
You talked about perhaps some price action on those stocks. Does it make sense to you, considering the news we're getting from overall for the energy industry, even though an investor might say, oh, well, West Texas Intermediate has come off roughly $20 in just a month. Even at these prices, these companies got very lean during the pandemic. Is this still a good level for them to generate cash flow?
Yeah, I mean, that's the remarkable thing. None of these stocks were pricing in $80 oil. At current prices, they're very cheap. They're too cheap in a lot of respects. And the reason I wanted to bring up Journey today, and I think in this sort of environment, companies like Journey are particularly well positioned. I like companies that have kind of like extra assets that you don't really have to pay for. And in Journey's case, they have a power generation business that they're ramping up, where they're burning natural gas power, or natural gas that they're producing in Alberta, and they're selling the power that they're generating from it. And they get no credit for that in the market. That sort of business, as they scale it, could be a 10 times multiple business, where they're trading at kind of closer to 2.5 times. So as it's kind of a traditional value framework called good co, bad co. And if you look at kind of what they're doing with their power gen, it kind of gives you comfort owning the thing, even if oil prices and gas prices were to fall more, they have this extra source of cash flow that kind of buffers it. So yeah, oil and gas stocks are cheap relative to where oil and gas prices are. And then there are companies available like Journey that are very underfollowed and that have some extra stuff that can help protect them in a downturn and give them extra upside if things recover.
Josh, before I let you go, having you on is always great because of your depth of knowledge of the industry, but you also like to get the outsider's perspective, right? As you talk to us from Houston, look into Canada. We have internal arguments about our oil and gas industry. Is it appealing from an outsider to want to invest in this country's oil and gas sector?
Yeah, so I made sure to have, I have my iHeart Canada oil and gas, I think it's called a toque up in I think Saskatchewan at least. And I think the industry in Canada looks great, and I'm invested across the border, so both in US and Canadian oil and gas companies. And, I chose to talk about an extra Canadian oil and gas company today, and I think that's indicative of a really promising environment for Canadian oil and gas stocks. And I think the best is yet to come.